Hello again, everyone. Well, hope you're having a nice day. I thought we could go over Bitcoin and analysis, why it's behaving like it's doing, and look at other people. I think that's pretty interesting to show you why you shouldn't listen to them. So let's start. Let's just take this guy. This is back in 18. So, all the way back here. Yeah, okay, back here. And he's just really confident.
Not this halving, but after the second.
1 moment, we just have to do this. Sorry. Whoop.
And halving after this one has currently taken place. And their bullish prediction is that Bitcoin will be reaching $1.5 million by the year 2030. And they said it's now more probable after...
Oh, sorry, that was the latest one. Yeah. So, okay, he's still really confident. And he's talking 2030. Like, that's a long time to wait. Fair enough. I think this was the one, yeah, 5 years ago. Yeah, that's right. And it's on, that's because it's in 20. Where did you go? No, 8. Still 18. Fine.
Predictions, but they all are fairly certain. I haven't seen anyone say that by 2020 that the price will be less than $100,000 per Bitcoin, which is kind of insane to think about because...
Yeah, and it just continues like that. He's using a lot of words, nice word set. Then let's take a look at this guy. This is, he's trying to predict the future here. Back there, that line was pretty good, I guess, but it's easy to draw a line. But he's trying to use some tools here. I like to show you what he's doing because he's picking the Fibonacci tool here, trend base, and he's then taking a low, a high, and then he's setting a new low down here. That's not how you're doing it. You would take it here, put in a low, a high, and then a low there, and then it could guesstimate the probability of where it could go. But then
the beginning of this move all the way to the high, which are Fibonacci multiples.
Yeah, he so quick, he did it just there. You're gonna see his mouse. My God, it's gonna go like this, duck, and then fast here.
A trend-based Fib extension from the beginning of this move all the way to the high, which are Fibonacci multiples.
And that's why he's getting a high one here. He can't do it like this. That's not how it's supposed to be used. I've done it here with this one. I took a low here, you can see, a high here, and a low there, and then got a probability, and that was pretty bang on the green there. We kind of made it up, but more like here. So yeah, that you could use it like this, but when you're doing it here, trying to use like a high, a low here, and then a high, and then a small low, then it's not really like, that's not how you're supposed to use it. And it's so uncertain to use it like that because it doesn't take account all the very variables like the market condition, the global economy, political uncertainty, all that. But we can actually go and look at some numbers on this. So let's remove this guesstimation here. Oh, sorry, wrong button. The thing you're seeing here is the central bank's interest rate. I'm using, for this purpose, I'm using TradeView. You can go and make a free account. It costs nothing, but you can only use 2 indicators at a time, and it gets a little frustrating, and there's some indicators you can't use. But I think it's pretty good because I don't want to use like a paid version, because that would be too easy. No, it's not so many that on YouTube. I think that's gonna pay $200 or something for per paid one. So we're gonna go with the free and use that. That is gonna be my general theme on this channel. Yep. Okay. Central bank's interest rate. They pushed it down here, and that made the market people borrow a lot of money that they just borrowed. Of course they did. They could. The interest rate was low, and we also have to look at the inflation rate here, because it came up because people had a lot of money. They were just buying and buying, and the money became less worth. Then the central banks try to counteract this by raising the rates again. It's called this is called quantum expansion, I think they're calling it, and this is what they're calling quantum tightening now. It's some tools the central banks are trying to use to stabilize the economy. But as we see it here, back here, the inflation was so nice and low, so that's what really drive the market also. But when it became higher, then the market realized that there's gonna be a delay from what we are seeing here and then how the market behaves, because this is the central banks, this is real time, and the market just have to follow the central banks. They have to like realize it, and then we're gonna see the tendency. The forecast is right now that that this is gonna continue for some time. Probably this high level here, the interest rate, are gonna continue until after the election, because the election has a lot to do with this. The inflation, if it rises, then this is gonna crash fast. We're gonna have a hard landing, as they say. If it continues like this, we are gonna probably have a soft landing, like a crash or just a trickle down. Hard and soft. But we also have to look at, when we're looking at this, because we can look at this also. Because people borrowed this much, the global economy just boomed. Yeah, and it crashed slowly when the inflation got higher. Slow down, like I'm saying, the market has to realize it and follow. Over here we began digging ourselves out. You can see how big the market economy was back here and how small we are now. So we are really not gonna move up here, because it's mostly the common man that's trading Bitcoin. The bottom here could be some banks, some huge investors, because it doesn't seem to want to get down there. But in general, this up here is the common man, you and me. So let's zoom in here at the market, at the global market economy. We are beginning to seeing some red, some small build up. This is on the week scale. So no, I'm not bullish on Bitcoin because of this, and also because of the election. We can go in here. Personal consumption expenditures, how much it costs to live, how much we have to pay for food, energy, everything, and it's going up. So that's not good. We are getting less money to spend on just whatever, like Bitcoin or a new car or hobbies, whatever. Yep. And then we can see the sentiment, consumer sentiment, how we feel about everything, how's it going right now. And this is the US, but it's a pretty good indicator, and it's not that great. We were back here at Bitcoin's high, we were over here, then the president election, and we got a little high after that, and then down. So we have to build up here again, and then it's going down now, so that's not a good thing. and then the money supply versus inflation. You can also see how the money supply, how we all got more money to spend, and the inflation and where it crashed. And we are down here right now, and we have to get above the inflation again before it's really good. And I'm gonna say after the presidential election, we're probably gonna see some positive, hopefully. Nobody knows. And why is the president election such a big factor? Well, we can just see it here, because we have the same people here running more or less again. So you could see just the uncertainty here, how it went. This is exactly when the president election happened, like from up here to there, down here again. So all this, we're probably gonna see it again up to the presidential election. I think it's gonna be even more extreme, because that's what I'm hearing from the news about the trials and on both sides, and the possible outcomes. Who could, maybe the vice president could actually get the seat, the U.S. president seat, and all that. So we are gonna see some even more extreme uncertainties here, I think. So yeah, that's why I think, again here, that's why I think that the Bitcoin is probably gonna go down. The only thing that could get it up right now is maybe the Indian market, because they're just booming. And if you look at the, it's pretty funny, at YouTube and just trying to search for like some kind of advice. Let's do it. Positions there. How was it? View count. That's a good indicator. And then you're gonna get some funny ones here. I really laughed here. And it's got like 1.4 million, and they use numerology for it's extreme, and there's a lot of these things in India. So, but even though I don't think India is gonna do it, because they are so high, and we are not seeing any real movement on here. We are beginning to see the red candle I was talking about, and we could see an even larger one, deeper one here. So yeah, that's my predictions. That's why I am thinking what I'm thinking. I'm not saying just the word sell and trying to also this guy.
I mean, yesterday we did get some big volatility when basically repeating myself, so I'm not sure if I'm going to be doing these daily Bitcoin updates forever. But the thing is that right now we're really just waiting for a breakout either above 43,250 or below 41,500, because then we have somewhat of a confirmation of what direction Bitcoin is going to go.
He's just assuming something from the numbers, where it's moving, and that's really not very good. You can't get a good impression or anything of the whole thing. So again, don't try to listen to those people. I have made a playlist on the channel called Davos. I think you should listen to that. I have gone through the things, and so you don't have to. All this here, yeah. You could listen to the playlist. The ones I would recommend is the oldest one of the ones, the videos here, because and then you can look at the numbers like I did and see what could go wrong. Jamie Dimon, he said back in 20, said some warning signs. He actually said the only thing he saw as a thing that could be a danger to the market was inflation, and that came. And he also talked about the interest rate and all that. So I think you should go have a listen, and then you could probably understand the market a lot better, because these people are the ones you want to listen to, not those people, because it actually hurt my brain listening to it and sifting through it and trying to give you these facts. So I hope you are enjoying this, and hope you're having a nice day. Bye.